Hi, this is your mortgage rate watch for Friday, October the 29th. There's really not too much to say other than the market might be regaining on some strength after all of the sell-off that happened, which again we talked about a little bit yesterday. When profit taking happens in the bond market, unfortunately for homeowners, what that translates to is pressuring interest rates higher. Now, what we have seen yesterday and today is what the market is calling some of the people who are bargain hunters coming back into the bond market and purchasing, and that's helping to bring the yields on those bonds down, and in translation for interest rates to bring those interest rates down lower. Now, again, next week is just all bets off. Until the Federal Reserve actually makes their announcement, we don't know what the market's going to do and how the interest rates are going to react. The one key thing that we can say, though, is that there's been so much heated debate now that comes up in the fact of inflation and what's going to happen in the future as far as interest rates and where they're going to go. Most of the banks right now and the economists are saying that, yes, interest rates will probably maintain and stabilize. However, they do see interest rates moving back up. And what we've been hearing is, this is all speculation, but we're just wanting to get this out there to you, is that a lot of the chief economists from the banks, our lenders, our funders, what they are saying is they see the interest rates returning back into the 6.5% range. Now, thinking back, what's very interesting, and this is just education and food for thought, I had to pick up my dry cleaning, and for a clear example, the dry cleaner, the owner said, gosh, Keith, it's got to be very difficult to get financing right now. We just hear how hard it is. And I actually had to stop, and instead of agreeing, I had to reflect back and say, when I first entered into this business after banking 10 years ago, there was no automated underwriting. It was full paper file submissions, tax returns, income, bank statements, paycheck stubs, everything to verify. And we had to submit these packages based on calculations we did on the good old calculator, and we had to be at a 43 debt to income ratio or less, sometimes 41, depending on the type of scenario and what the credit score was. And you had to have a ton of compensating factors. Now, looking at that, respectively, in contrast from today, actually still today, with all the tightening that we have had over the past 3 years here since 2007, I'd have to say fundamentally since 2000, the whole way of underwriting has actually gotten easier. Even with the tightening, we still have automated underwriting. And what that does is it allows us as loan originators, the banks, underwriters, the whole marketplace to get things through a little bit faster. So in saying that, we can actually run it and there's no hypothetical guess. As long as the loan originator is doing their job and they're collecting the right information and putting the right information into the system is generating us an answer before it actually gets to an underwriter who validates the package and then finally gives us the final approval. So just putting it out there that, financing is very difficult. She says, you had to have 20% down. Well, correction here. Keep in mind, there's still FHA with 3.5% down. Credit scores down to 640. There's a lot of scenarios that are still out there. There's still mortgage insurance available for both condos and purchases. Not everything has to be 20% down. And when people are saying the market's very difficult, well, unfortunately, from 2004 to 2007, what was created was an unrealistic market. Again, you're putting out stated income loans, you're putting out 100% financing, and the loan to values were being pushed very high, debt to income ratios were being pushed extremely high. And unfortunately, it created a bartender mix for failure, for unfortunately several people and folks out there, which unfortunately the market is now showing in foreclosure turnover. So again, there still is financing available. We've just returned to the times where it's gone back to common sense, it's gone back to practical underwriting, and it's gone back to just the numbers. So don't feel that financing is unavailable. When you hear that from people out there, make sure you do speak to someone who can help assist you in the process of becoming pre-qualified, and they're taking the true steps in actually getting to the next step of home ownership. Any breaking news, we'll make sure to update you on our Twitter and Facebook fan page. We're going to go through a major overhaul on the mortgage reel here soon, and we think you're all going to like it with the amount of interaction you're going to be able to have with us, and everything's going to be real time. We're going to put out real scenarios, people's financing, the customers that we talk to on a daily basis, what types of problems they're running into, what issues they're having, and also the success stories and real-time people saying they are having success and how they're having success and how we've been able to assist them. So stay tuned. We'll be back on Monday, and we'll talk to you real soon. Keep in mind, November 3rd, Wednesday, is going to be a whopping day, and the market's going to take a whole shift on how they're going to digest the information coming out from the Federal Reserve. To all the kids and families out there, happy Halloween. We'll talk to you soon.